Welcome to the Personal Finance Podcast for doctors with Meena Shriram and Chanda Varma. This podcast aims to simplify all aspects of personal finance and help you make smart and informed choices about money so that you can live happier and stress-free lives. Today's episode is brought to you by Chanda Varma, who is a financial coach and vice president with the doctor practice at MFA, the only company in India having a dedicated practice for doctors, helping them plan and achieve their financial goals. Established in 2005, MFA is recognized as the most trusted and respected firm in the industry and have built this reputation by always putting their clients' best interest above everything and taking care of their money the way they would do it for their parents or best friends. Over the last 8 years, Chanda Varma has interacted with more than 3,000 doctors and has been a speaker at medical conferences and conducted many financial literacy webinars for doctors. Needless to say, she understands the finer-most nuances of a doctor's financial life. Do listen to this episode, and now over to Chanda.
Hi, this is Chanda Varma, and today I'm going to talk about asset allocation. We all have been taught, don't put all your eggs in one basket. Today, let's understand this basket. And let me start by telling you about two very interesting people I met recently. A well-established businessman, having factories, thriving business, kids well settled in the US. He was also doing his investments in US as well as in India. And he told me, I'm a businessman. I know how to make money. Fair enough. He had amassed a lot of wealth through his 35 years of work life. But as we spoke, he mentioned that he mainly had a lot of properties as investments. In fact, if I added up all his property values, it was close to about 15 crores. And we all know that having real estate makes us all feel that we have a big asset size. It's a different story that property is illiquid, tax inefficient, high maintenance, and not really hassle-free. But anyway, this gentleman was very proud about his net worth in real estate. And he also mentioned he had some stocks, PMS with somebody, and a small mutual fund portfolio. So to his mind, he had different assets in form of investments and therefore different baskets of eggs. But did he? Second, I met a 45-year-old corporate executive, a high flyer, working with a top private bank, managing overseas business accounts, earning top dollars. I assumed this person would definitely be financially savvy. But to my surprise, she said she earned a lot, but most of her and her husband's savings went in the education fees of their two kids, IB education and stuff. Their 4 BHK home loan EMI took also a lot out of their savings. And of course, their insurance policies premium because they wanted to ensure that their family was okay if anything happens to either of them. For investments, she just had some SIPs going on, but not a substantial corpus had been created. I mean, for a person of, at that life stage and career. What happened was that she was relying heavily on her ESOPs and of course, few insurance policies. So to her mind, she had different assets, mutual funds, ESOPs, the house, the insurance, and therefore she had different baskets of eggs. But did she? See, we have many misconceptions about asset allocation. And let me explain this with an example we all will understand. Balanced diet. We all need to follow a balanced diet for our health, right? You need to have carbs, proteins, fats, minerals, vitamins, but in the right proportion. Because anything too much or too less starts showing in different ways in our body. But how many of us really understand what is it that our body needs? What food has to be eaten in what proportion to get that optimum proportion of all elements that we need? How many of us are able to manage a balanced diet consistently? If it was so easy, everyone would have been able to follow it and we would have no health issues, isn't it? Doctors themselves are unable to follow this as a guideline. Likewise, people think that if they have a mix of different investments, gold, mutual funds, stocks, insurance policies, land, they have their eggs in different baskets. But this is only partially true. because asset allocation means spreading your money among various investments in such a manner, in such a proportion that if one investment loses money, the other investments will make up for those losses. The two people I mentioned I met had different assets. Their proportion was totally skewed and therefore very, very risky. Now, why is it important, you may ask? It is an important decision that any investor makes for himself, the decision of asset allocation. Now, different asset classes move in different directions. No asset class will perform in tandem. For example, when equities go up, you will see gold investments usually go down and vice versa. Real estate market, for example, seems to be improving currently. But over a longer period of time, over the next 7 to 10 years, the growth expectation is only 5 to 6% all over India. But one assumes that it is best that they invest in something that is performing really well at that point in time. However, it is very challenging for anyone to predict in which direction any asset class, be it equity, be it debt, be it real estate, at where will they move in the future or in a few months down the line. So how you spread your money in your portfolio is very, very important. Now, how do you take this very important decision? Honestly, this decision is a very personal one. And this decision may change for you at different times in your life depending upon 3 important factors. You should note that down. Number 1, how long you have to invest. Number 2, your ability to tolerate risk. And mind you, people's perception of their ability to tolerate risk is quite different from their real ability to tolerate risk. And many times it so happens that when it's a bullish market, people tend to take risk. But when the market corrects, they see their portfolios down by 15-20 lakhs. It starts hurting them. That's when you know your real ability to tolerate risks. And number 3, your expectation of returns for the risk you take. There is no concept that one size fits all. It just doesn't apply. Every individual's financial condition is different and it will require a different approach. If you are unsure about the optimal asset allocation you need to achieve your goals, given the time you have to invest, your risk appetite, your expectations, then you should consider seeking the services of an expert. So happy investing. I hope this helped. God bless. Thank you.
You were listening to the Personal Finance Podcast for Doctors with Meena Shriram and Chanda Varma. If you find this podcast relevant and interesting, do share it with other doctors as well. It will be great if you leave a review, share, like and subscribe. You could also let us know if there is any specific topic that you would like us to cover. For any queries or help, you can get in touch with MFA's Doctor Practice Team at 892-800-6140.